Told you guys to take a look at this one, Cloudera stock. Not only up 8% today, but after hours up another 10.5%. So I told you guys to take a look at this. I told you guys I was taking a look at this. So we're going to take a look. Obviously, this is because they're reporting earnings, and on my earnings video, I said this is a stock I wanted to get into, and I slightly wish I did earlier today, right? Would have been pretty sick. We'll still consider getting into it potentially, but just let's take a look at these earnings and see what's going on with the stock. So Cloudera went ahead and put up a non-GAAP EPS of 4 cents, which they beat by 7 cents. So profitability based off of the numbers they really mess around with, but from a GAAP perspective, they beat by 4 cents, which is a negative 22 cents EPS. So obviously, I'm not a huge fan of unprofitable companies, but I do think this company is one that's still working on a lot of things, working on, really progressing itself. And you see here from that revenue perspective, 211 million, which beat by 9 million, which is a very good beat, which is up nearly 50% year over year in terms of revenue. So those are good numbers for sure. And obviously, it's a company still in its infancy as far as where it wants to go. So there's going to be a couple things we're going to look at for sure. Because if you're going to post a 50% year-over-year gain, I want to see guidance because I want to see if you're going to be replicating that. So we'll see how that goes. Obviously, this was a stock that at one point, if we look a year out, let's look 5 years out, definitely had some potential overvalued issues going on. And then it dropped all the way down to the $5 range, which, would have been a good pickup then, right? Too bad it didn't happen. But this is a 2017 IPO, so pretty much not a good IPO as most IPOs tend to go. And again, this is one of these IPOs that isn't profitable, so it's one thing that scares me about it. I was more interested in picking it up really for this earnings because I felt good things were coming for this earnings, and clearly they did. But other than that, you see upside guidance too. ARR was up 11% year over year. Love that. Subscription revenue totaled 182 million. Services revenue was 29.8 million. Income from operations was 11 million. So they did technically make some money. Okay. Including 7 million in merger-related costs. From a buyback perspective, they approved a share repurchase of up to $100 million. So one thing I think is very important to mention with buybacks, and I've mentioned it before, usually it's a good sign of the health of a company. It means this company believes that these shares are undervalued, and they're picking them up because it's a good time to while they're undervalued. So company's confident in these shares, and obviously that's part of why the stock's up, because issuing a buyback program is pretty nice. For quarter one, they expect 202 million to 207 million versus a consensus of 206, so a little bit weak. Subscription revenue of 180 to 183. EPS of negative a cent to 1 cent. Consensus was negative 4 cents, so they did have a positive outlook in terms of EPS, which is good. Which this company could be break even if not profitable, which would be pretty darn cool here. Upside for the fiscal year 2021 has revenue of 860 million versus a consensus of 857 million, so above consensus for the full fiscal year. Very cool. And EPS of, that's right, 25 cents to 29 cents versus a consensus of negative 1 cent. So they weren't expected to be profitable, but they're giving me an estimate that they're going to be profitable this year, huh? I like that. I really do like that, and I think there's plenty of room for the stock if they actually do keep those numbers up properly as they guide. Let's look at the press release here, see what they have to say. We continue to execute well, delivering another strong quarter in quarter four on financial and operational metrics. I'm especially pleased that we are seeing strong interest in CDP. With many customers across our base building plans for CDP public cloud adoption. Cool for them, says their CEO. In fiscal year 2020, we finished the hard work of merger, integration, and completely reposition the company for long-term success. I cannot be more enthusiastic with the setup for Cloudera as we enter the next phase of the market's evolution, helping our customers realize true hybrid and multi-cloud data solutions. We believe the opportunity for Cloudera has never been bigger, and CDP private cloud expected in Q2. We believe it expands even further. I like this. We plan to generate substantial non-GAAP operating income and cash flow in fiscal year 2021. Substantial, huh? Whew! I like that. I like that a lot. But the actual, GAAP loss from operations for the fourth quarter was $64.4 million. You don't like seeing that number. Obviously, a good loss of money. We don't like to see it. But that was compared to last year, which they lost $87 million in the same quarter, and this time they grew revenue by 50% compared to that. So overall, it's a company in progress. I think that's very important to note. There's definitely some movement there. Fourth quarter non-GAAP income this year was $11 million versus last year it was a loss of $30 million. So again, they are progressing for sure. Really, the more I look at this, wishing I had picked up these shares earlier today, right? Or the day before, really. But to each their own. Who knows? We could have some more down days in the market. I could see that for sure. We'll see. I'll be taking a look here, but let's keep looking at these numbers. I might find something I don't like, you know what I mean? Operating cash flow was negative $9.4 million. I don't like that. I don't like losing, spending more money than you have, which $16.1 million of merger-related payments. So they technically could have been positive in terms of a cash flow, but operating cash flow last year of $40.2 million. So definitely generated less cash. Obviously, that doesn't help this, this number here of the merger-related costs for sure. Last year, the GAAP net loss was 45 cents a share. So again, very good progress. Very good progress. That's what I like to see from a non-GAAP perspective. It was 15-cent loss last year, and it was positive 4 cents this year. So I like to see that. I really like that. I really like that. Gosh dang. What else do we like to see? They have annualized recurring revenue, which is an 11% year-over growth. So that's recurring revenue, which is super cool for them because this is people with subscriptions with them that they know they're going to be getting this money every single year. They're going to be getting this amount of money, $700 freaking million worth of money. Let's go. Customers with a or GAAP subscription gross margin was 84%. Non-GAAP subscription gross margin was 88%. Non-GAAP income from operations was $11 million. Customers with annualized recurring revenue greater than $100,000 were 1,004, up 27 from the prior year. Cloudera's board of directors authorized a repurchase of $100. Cloudera appointed Robert Bearden as president and CEO, an experienced enterprise software executive and open source software luminary. He has served on Cloudera's board of directors since the merger of Cloudera and Hortonworks. Cloudera Data Platform debuted on the Microsoft Azure Marketplace. Love that. Introduced the first Apache NiFi and Apache Kafka public cloud services on CDP, flow management, and streams messaging on Data Hub. That's not the only hub I know about. Introduced the initial release of Cloudera Streaming Analytics, powered by Apache Flink. Expanding the Cloudera data lifecycle capabilities. Okay. From an outlook perspective, we saw obviously what they were expecting there. I like to see these estimates for sure. I think these are very good estimates. I like it. They do plan on clearly adding more shares for the full year, it looks like, but overall, I'm a huge fan. You know what the last thing we check here is? You know where I'm scrolling down to. Let's take a look at these. Yeah, that's right. This balance sheet. So current assets, you see right now cash on hand of 107 million. Total current assets of 707 million, which is down from last year, to be fair. Total assets of 2.3 billion, and from a liabilities perspective, accounts payable of only $3 million. That's crazy. Total current liabilities of 579 million, which is less than the total current assets, and a overall total liabilities of 861 million versus a 2.3 billion dollars in total assets. I love it. I love it. I love it. I wish I had looked at this company earlier than today. I hate to say this, but I hope we have another pretty bad red day with this virus and everything. No one knows what's going to happen with this market. And if I have another down day, Cloudera is going to be a pretty big pick for me. I'd love to start a good position in this stock because I think they've got a lot going on. I think they're really well poised for the future, and I'm a huge fan of what they're offering me. So I'll definitely be taking a look at Cloudera. I think this stock is, after this recent bump up to the $8 range now, I don't know if it's ready to be in the buy status, but it's darn freaking close. I could tell you that. I'd like to see what happens, but I love the fundamentals of this company. I think due to future growth, I think they're going to be super good. But let's take a look. I'll give it a second, give it a couple days, and then see what I like. All right.